on Revfin. It's a digital lending platform that's focusing on sustainable mobility, and they've concluded a Series B fundraise of about $14 million. Sameer Aggarwal, the CEO and founder, now joins in on the show to discuss that and lots more. Sameer, thanks so much for taking time out. So the round, I understand, was led by Omidyar Network. Tell us a little bit more about this latest fundraise. Who are the investors that have participated?
Our fundraise round was led by Omidyar Network, and we also had investments coming in from ADB Ventures and Companion Capital.
So how are you really going to accelerate your focus on the electric vehicle ecosystem? What's the plans to do with this money?
Yeah, so we raised $14 million in this round, and we are primarily an electric vehicle financing and leasing company. And the idea of this fund is to utilize it for growing our loan portfolio. We will raise debt on the back of this equity round, and then we will deploy it in the market to finance commercial electric vehicles. We are currently present in 23 states, and we have a substantial market share in about 4 or 5 states. We now wish to increase our market size to about 20-25% of vehicles financed in all the states that we are present in, and that's for electric three-wheelers. But we also want to start increasing our market share in electric two-wheelers and electric four-wheelers. So that's the first thing, growing and penetrating existing markets. The second thing we want to do is we want to reach more states. So from 23, we expect to get to about 25 to 30 states in the next 6-9 months. And finally, we've primarily been financing vehicles, but we also now want to take a broader look at the ecosystem and start financing batteries and charging stations, and perhaps even more forms of vehicles like tractors, etc.
Now, according to estimates, you've been valued at about 300 odd crore rupees post your allotment of Series B shares. Take us through any valuation details you can share.
Well, we have not necessarily declared the valuation of the company post this round. So, yeah, so we're not commenting on valuation at the moment.
Okay, fair enough. We'll avoid that, but let's move on and talk a little bit about, how you're looking to, how many vehicles you're looking to finance over the next 5 years.
So we have so far financed about 30,000 three-wheelers and in total about 35,000 electric vehicles across all the states we are present in. We have a very bold ambition of financing 2 million electric vehicles over the next 5 years. We've been growing very steadily at about 3 to 4 times year on year. We are currently actually tracking above our target for funding this year. So we expect that we would be able to reach that 2 million numbers in the next 5 years.
Right. What about your financials? Can you take us through your overall revenue from operations, how it's grown from the previous fiscal, and what your target is?
So currently our annualized revenue run rate is about 100 crores, give or take a few. And that's sort of grown about 3 times in the last 9 months or so. I think this financial year we'll close revenue at about 80-85 crores in that range. And we are a profitable organization, so we are PAT positive as well.
And take us through your long-term vision and plan for the company.
I think we've been very clear right from the beginning that electric vehicle financing has to be viewed very different from how one would finance ICE vehicles, because electric vehicles are new and they require a certain type of infrastructure and ecosystem that does not currently exist. Right, so I'll give you a few examples. Like there is no secondary market or not a very well-developed secondary market, so it's very difficult to repossess a vehicle and sell it, not knowing where we would sell it and for what price. Similarly, availability of charging infrastructure, service infrastructure, spares, and so on and so forth. So our approach has been to always develop an ecosystem for electric vehicles before we start financing them. Right, so we do a variety of partnerships with OEMs, with dealers, with telematics companies, with insurance companies, with fleet operators, e-commerce companies, charging swapping providers. And the whole idea is that once we create an ecosystem, then we can sustainably finance these vehicles, and that really helps our drivers as well as and to ensure that the drivers the vehicles are roadworthy. Right, so that's been our approach. So I think the first thing is we focus a lot on ecosystem creation. Second is that very interestingly, what we find, especially in the commercial vehicle space, is that a lot of the people who are buying these vehicles are first time borrowers with no credit history, and they're also first time drivers. Right, and that's a very unique proposition, and it's very difficult for traditional financial services companies to underwrite such customers. So we've developed a very unique and innovative method of underwriting this set of customers, and we are able to do that digitally as well. So what we find is that a combination of ecosystem, digital, and unique underwriting really helps us build a competitive moat, and also creates, in some ways, a lot of entry barriers for other competition. So we don't today, as things stand, we don't necessarily have any direct nationwide competitor in the space that we operate in, and we do expect that that will perhaps remain the case for the next 3-4 years, till such time that this whole electric vehicle ecosystem becomes so big that everybody comes into it. So our expectation is that ultimately we're not really thinking too much about competition. We are only thinking about growing at this stage. And as larger financial institutions start coming into this space, we expect that they'll start partnering with us, given the expertise we've built in this space, rather than trying to compete with us.
All right, good to have you on board. Thanks so much, Sameer, for joining in. Let's move right on then.